USAA's Bernie Williams sees a bear market ahead in commodities, but he's bullish on dividend stocks. He's here to tell us why. Welcome, Bernie.
Thank you.
All right, so why don't you like commodities right now, especially when the Fed seems committed to their easy money policies?
Well, two reasons. I think the really fast growth in China is at an end. Their rapid industrialization is slowing down, and they're going to emphasize more the consumer parts. So that's always been the marginal demand on commodities. The other reason is there does seem to be a little bit of a secular trend in the U.S. to lower gasoline usage. And so you combine that with the recent fracking and the revolution that's going on in the U.S., I don't think we're going to have an oil shortage anytime soon.
All right, that's energy. What about precious metals? The gold miners are down around 40% this year when you check out the GDX. Gold is down around 20%. So can you go bottom fishing there?
I think you can. Got to have a long-term perspective. We do think gold is a good hedge against potential inflation and debasement of currencies. Think of miners as a leveraged way to play on gold. They're down very sharply, but they've had some cost issues. We think they're starting to get those under control, and I think the miners can work even if gold stays relatively flat from here.
All right, we talked about energy and then precious metals. What about ag stocks? There is one commodity-based stock that you like. That's Monsanto. Why?
Well, we've liked it for a long time. And Monsanto is a leader in the genetically modified organisms. So think developing seeds for drought. Okay, that's particularly important right now. They increase yield, okay, per acreage. That's very important to farmers. Farmers make more profit. We have more people to feed. I think it's a great company for the long term.
So it's not a straight commodity. They have a competitive edge.
Exactly. There's only a couple of companies doing this, Dow and Syngenta.
All right, and most of all, you liked dividend-paying stocks. You're not a fan of commodities, but dividend-paying stocks you like. Tell me why and which ones.
We like dividend-paying stocks for some investors who may have to draw down on distributions for them. A dividend is more certain than a capital gain. But dividend-paying stocks are also very high-quality stocks, so they typically have high free cash flow, high return on equity. So we can build a portfolio that will yield roughly 3%, and it will grow that dividend at a 10 or 15% rate. That compares very favorably to, say, a 10-year Treasury or 270. So a couple of examples might be Eaton, which is a diversified industrial. It's got about a 2.5% dividend yield, but it is cyclical and it's leveraged to an upturn. Another example might be Texas Instruments. They're a leader in the analog space, and they've committed to returning 100% of their free cash flow now to dividends. They're yielding close to 3% right now. That's just two names. But again, focus on the portfolio, high-quality stocks, and a dividend that grows over time.
All right, thanks a lot, Bernie.
Thank you.
And thank you for watching The Street.